Cool. Hi, everyone. Welcome back to Crypto Codes Season 2, Episode 1, brought to you by ICN.live, where we are live. My name is Tom. So just a quick intro of myself. I am the ecosystem lead at Brink. I've been in the Web3 industry since about 2020. I started off kind of like everyone did, messing about with crypto, investing a little bit and just seeing how it all works. And the amount of growth that happened in a short period of time just got me super invested in terms of me personally, in terms of the research I did, in terms of the amount of interest I had for the industry. And the thing that really made everything click, the moment I really got passionate about crypto and blockchain and this Web3 industry, is when I realized the huge amount of potential in a couple different areas. So firstly, in the future, in terms of the amount of impact it will have within robotics and IoT and the way we interact with the world on a daily basis, but also the most important one for me was in terms of identity. I kind of came across this. I read the book Blockchain Revolution by Don Tapscott and Alex Tapscott. And that was kind of a light bulb moment for me in terms of realizing the amounts of people who don't have access to the things that are considered basic in where I come from in Europe, in Paris, in London. That was a light bulb moment for me in terms of banking the unbanked, realizing that most people, or maybe 20-30% of people, don't have access to this basic infrastructure that makes life essentially possible in the way that we are used to in the modern Western world. And that kind of made me want to join the mission of coming into this industry and pushing for this technology, both on an institutional front, but also in terms of helping early stage startups. So that's when I decided to join Brink. Brink, to give you a quick intro of that, we're a global venture accelerator. We've been around since 2014 in a bunch of different industries, including IoT, AI, climate, alternative proteins. And in 2021, Animoca Brands invested in us. They started up a whole fund with us, took out a big portion of our Series B as well, and invested into Brink. And we've been running accelerators within Web3 and supporting the ecosystem ever since. So we've built up a portfolio of 80 plus companies in Web3 alone, 200 overall, and we're essentially on a mission to help build these chain ecosystems. So one of my gigs was running the SUI accelerator from the Brink side. Essentially, what we did there was it was pretty impressive. I mean, that got me really passionate about SUI because I just saw the amount of hype that was happening within that chain. SUI is, firstly, the founders are amazing. The founders behind it, I've met a couple of them, and one of the smartest, most intelligent, most well-spoken founding team I've seen. One thing that was kind of like mind-blowing for me there was the amount of traction we got from the promotion we did there. So we opened up an application period for the program, for example. We got 630 applicants. This for me was insane. It's not like anything we've ever seen during our accelerators. It broke all our records, and that was probably one of my main achievements to date in my career. And now I'm looking at ecosystems as a whole for Brink, so leading partnerships, leading the implementation of new programs, and leading the conversations around the new accelerators that we run. That's a little brief of how I got into crypto and about Brink. But to introduce myself, I'm the new host of the Crypto Code, where we meet up weekly to discuss everything that's happening within the industry that we love and that we push for. And please don't forget to subscribe, like, and join us on a journey as we go into one of the main channels across this industry, and we become some of the main advocates for both early stage builders, but also for the industry and industry and institutional adoption and retail adoption. That's really our mission, and we're really excited about it. So please like, subscribe, and join us as we push forward. Cool. So the first thing that we're going to look at this week, a quick market pulse check. Obviously, it's been a really rough week. I mean, this is not something that we like to see. Everything is red, especially on the 7 days. Some things have done very well, though, and we'll mention a couple of them in terms of Aster and Plasma. It's nice that, this goes very well with what I was going to talk to you guys about during this stream. Aster and Plasma, despite it being a very rough week for the market, they've done incredibly well, and it's something that we'll look a bit deeper into why this has happened and who's been the kind of main proponents behind them. We know CZ has been very involved with Vaster. We know Plasma have done fantastically well on the community side. Everyone loves a big airdrop, and they've smashed that side of things. But across the industry, we've seen kind of like an upturn in the last few minutes, which is nice. Everything's kind of going green, but it's been a rough week. Everything's been in the red, and it's a good moment to realize and to remember that we're not in this for the short term. We're in this for the long term, and the small downturns, the dips, they are just part of a new, exciting, volatile market. So just remember that. Don't get too panicked about the fact that your portfolio is a bit down. I've seen people whose portfolio are 75% down on the past couple of months. That happens. That also is probably a message that you should hedge your bets a bit better. Have proper allocations within your portfolio. Very basic rules like having a Bitcoin dominant portfolio, and then having your conviction plays as well, but don't ever make your conviction plays so big that you are at risk of liquidation or significant downturns in your personal life because you've allocated too much to a token. And it's something we've all fallen prey to, right? It's for those of us who've been around. I've been around for 5-6 years. Some people have been around for 10+ years. They've seen tokens go 1,000+ X in a matter of days, and that experience can kind of misguide you towards making riskier decisions that might have a negative impact overall, just because you kind of have that false courage of thinking that just because something's happened in the past, it's going to happen again. So just keep in mind, downturns are a part of this, but make sure you are kind of allocating safely. Another thing to mention, fear and greed. Fear is very high right now. Greed is on the index. We're up. We're at 32, which is the lowest it's been in 6 months, which is not a great sign. Having said that, I mean, obviously, it just means that everyone's kind of panicking. Everything changes within crypto in 2 minutes, and in large part, it's just because Bitcoin's not been performing well. There's been mix of things happening on the institutional side. BlackRock recently bought $500 million of Bitcoin. There's been a lot of investments into Ethereum. Likewise, some other funds have been dumping their BTC and ETH treasuries. ETF inflows and outflows have been, very mixed. Obviously, swaying towards more sales, which explains the downtrend in the markets. But just keep in mind, these things, everyone's kind of, they've got their quants, they've got their ability to capitalize on these swings. Don't panic just because the market's going red or the market's going green. Even if the market's performing great, don't kind of like get over courageous or overly brave because you think everything's going to go amazingly. It's a volatile market, and that's just the nature of new industries. Cool. So we'll go on to the first thing that I was going to talk about today, in terms of stablecoins. This is something where we've seen a lot of movement in the past week. There's 2 main things I'll probably mention. First thing is Tether. Tether, one of the biggest players within the stablecoin markets, obviously the provider of USDT. They are planning to raise $20 billion at a $500 billion valuation. We've seen very few raises like that worldwide across any industry. Recently, OpenAI raised a huge amount in the billions as well. But seeing Tether, one of the main this is a huge tell of what's happening within the market. It's pretty incredible to see essentially a crypto company, a Web3 company, go and try and raise $20 billion from institutional players. It's very rare, and it's a very kind of telling sign that our industry is maturing. Another thing that's happened this week, I'll speak more about Tether in a second, but to give you the high level, Plasma, the XPL token, they've launched, they've gone to mainnet. Everyone is very excited about them, and rightfully so. Probably the main kind of thing that we've seen throughout this cycle, as weird it's been and as different as it's been from 2020 or 2016, is the adoption of stablecoins and the push towards stablecoins. Plasma is looking to create a chain that is geared towards essentially being the ultimate playground for stablecoins. And I'm very excited about them, and the market is clearly very excited about them. And they've done things incredibly well in terms of getting the community excited about them as well. They've recently had their airdrop, both from the pre-sale and generally from people who've engaged with the platform. People were getting, for trading a couple dollars on the platform, they're getting $10,000 airdrops. I personally don't farm airdrops too often. It depends on the ecosystem. I didn't farm this one, but I am regretting it now. It's incredible to see just how much hype there is around it, and how much hype also a good community campaign and a good airdrop campaign can contribute to the success of a project. There have been a lot of cases recently of projects not handling that side of things too well. This is a perfect example of reward a community for activity and reward a community for money, with money, and they suddenly get very excited about things very quickly. And Plasma have played on that very well. That generally doesn't amount to much in the long run. It does mean you have a very good base of people who are excited about your product, which is amazing. It's not the only indicator of whether a project's going to succeed over the course of 10 years. So, don't slam a project because they've done a terrible airdrop or they've handled the community poorly during the TGE stage. Linear, for example, I don't think that many people were excited about the airdrops. It wasn't huge allocations, but it doesn't mean that the project itself isn't fantastic. I mean, their integrations with credit cards, their integrations with institutional players, and the plans that they have in the pipeline are unlike any other. It's very rare, and it kind of goes to show that consensus don't put as much of an emphasis on community, but it's still, their approach is just, it's slightly different, and it's fun. So yeah, we'll go into those two a bit more in depth, but looking at Tether, as I said, raising $20 billion, a $500 billion valuation. Tether recently hired a new chief business officer as they look to enter new markets such as AI, climate, and others. That's super exciting. I mean, up until now, we've kind of seen Web3 and crypto and the players within it operate in a sort of silo. We've seen people essentially try and sell to a native Web3 audience and not go outside of that. This movement into other verticals, and it's something that I've seen quite a few different foundations do over the course of the last 6 months in terms of how they're strategizing their plans. They want to go into traditional industries. AI is obviously a super hot topic, but climate is obviously a topic that will come back up tomorrow. It's not receiving as much venture funding as it did 4 years ago, but it definitely isn't receiving as much venture funding as it will in 2-3 years as it becomes more and more important. So I guess for me, seeing Tether hire someone firstly who comes from a TradFi background, who understands the market very well and understands how to form these partnerships, and move towards those industries and try and raise so that they are adequately prepared for this. That's a very nice signal to the markets, and it kind of confirms my theory that we're definitely not going to see the same kind of market as we did 4 or 5 years ago or 10 years ago. In terms of, people are very excited about the real world opportunities, and stablecoins are the kind of catalyst for that. They're a catalyst, and they're also the first kind of use case that's really truly stuck. There's a variety of reasons for that, but going back to what I said at the start in terms of what got me into blockchain and crypto, one of the things that I find super fascinating is people from around the world who necessarily haven't had access to traditional banking systems, who can't even do remittances properly, who can't pay for things because their country's currency has been depleted by poor decision making and corruption. Instantly, stablecoins give an avenue for all of that to work, and for economies to form and network states to form without necessarily the intervention of governments. And true decentralization starts when you have a system that works for payments and for sort of unbanked banking, and that is truly exciting. I know some people, I've met quite a few people within this industry who entered it because of that exact reason. I know some people from countries whose government completely collapsed and they can't set up a bank account. Their passports aren't strong enough to actually set up the bank account, or to get a visa anywhere. So they're kind of stuck in limbo, where they essentially need stablecoins to be paid in stablecoins to be able to live. And that's an incredible thing. It's amazing that we're already seeing people live off the crypto economy. And this move that Tether is doing, this move that their new CBO is doing, it's a very good step in the right direction. So I'm very excited about that. Their total market cap crossed just under 300 billion on September 21st. That's the first time it surpassed 290 billion. And that was fueled by institutional inflows and DeFi demand. Yeah, and then, okay, I'll move back to Plasma Chain because I think this is worth talking about. The really cool thing about Plasma Chain, for those who don't necessarily understand why stablecoins need their own L1, it's incredible because it essentially it's all EVM compatible. So it gives all DeFi tools across crypto access to this chain and access to a way of operating with stablecoins that wasn't available before. This is a much cheaper way. For example, if you're operating on Ethereum and you integrate with Plasma, suddenly you have a way of transacting in stablecoins that is near zero cost, which is incredibly important when you consider once adoption starts happening on a mass scale, people don't want to be paying a huge amount of gas fees every time. And even the blockchains of today, the best blockchains for the best tech, they're still costing, like if you were to do all of your daily shopping, all of your daily kind of like interactions over the course of time, you'd start getting a bit annoyed about the fact that you're having to pay all these fees. This gives a very good way for us to essentially the infrastructure for us to start using stablecoins on a daily basis. So I had a look in terms of what the key features were and what the key selling points were for Plasma. One of them was performance and scalability. So Plasma BFT, it's a derivative of fast hot stuff consensus. It processes thousands of transactions per second, so it's very quick. Throughput settlement is very high, and without the sort of congestion issues they might face on consumer dApp chains and generally the issues that come with having a huge amount of users using a lot of different apps and gaming and the advent of robotics is here, which uses a huge amount of transactions as well. That causes a huge amount of congestion on the network. So it's good for us to have a chain that's dedicated to operating and operating solely for the purpose of us being able to transact within an economy. There's a stablecoin focus that we know, so everything's, for example, being paid for in USDT instead of volatile assets. This is something I spoke to a friend about a couple of years ago. He was exploring the idea of creating a chain where the gas fees are paid in stablecoins because during the bull market last year, in 2020, if you guys were around, you might remember having to pay hundreds of dollars for transactions to buy your NFT or to make a trade, just because there was just so much congestion, and also the price of ETH was just ridiculously up, and it was terrifying to think that if you made the wrong trade, and it also, like, for most people, we're not making $100,000 trades every time. We're investing a portion of what we earn every month, so $1,000, $2,000. Having to pay that much of a gas fee on every time you trade, and if you think you made the wrong decision, not being able to because it would take such a big portion of your portfolio to make a trade back, that's a big fear impact. And one of the great things about seeing chains like Solana, like Sui, and all the ETH2s that have come up, obviously that's made that problem a much less big one. But I mean, if you still want to operate on Ethereum, there are still some things that are very important that Ethereum is still very important for, and obviously Ethereum Foundation is making a big push towards supporting the ecosystem at the moment. It's very important to be able to not rely on volatile assets, and I think that's what Plasma is doing incredibly well. XPL, let's talk about XPL for a second. Firstly, incredibly well-performing assets. Let's go on to it. the cool thing is I can just flip this to the best performing assets for the week, and Plasma is second. Huge market cap, goes out into the market at 2 billion. It's done incredibly well since launch. Most tokens you see today will start dipping after they launch. Obviously, this one had a bit of a dip, but it's recovered right back up and it's performing really well. I think this goes to show, even if you do a big airdrop and you give a big allocation to community and the ecosystem, it doesn't necessarily have a bad impact on price if people have conviction about your product. I see more and more people be negative about airdrops. I still think there's a huge amount of value, and I think this is a perfect use case of how to do an airdrop and how to do it well. So they've done incredibly well, and you can see it from the price action that's happened over the past couple of days. Why is there a need for an XPL token? Let's talk about that for a second. So it's used for the transaction fees, beyond the stablecoin operations, of course. It's really important for a network to obviously have a token, and it essentially allows people to interact with the chain in a much bigger way than you would be able to otherwise. So yeah, I mean, overall, those are probably the two biggest things to talk about in terms of stablecoin adoption for this week. So there was obviously Plasma, and there was the sort of the movement in Tether, firstly hiring a CBO and going towards the fundraise. There's a lot going on within US Treasuries, advancing the Genius Act for rulemaking. Metamask's supply of MUSD has gone up to 65 million. DWF, their Falcon USD, has done very well as well. There's a huge amount of demand for stablecoins, and it's something that we're seeing more and more governments look at doing. And it's going to be interesting to see how that space grows. We'll move on to the next part. And I've mentioned MetaMask already. One of the really interesting things that's come out of the past few weeks is the networks and the mega apps that have been a constant presence throughout the market for the past few years. MetaMask being one of them, Base, the Coinbase chain, being one of them as well. They are starting to discuss launching tokens, and it's really interesting to see. For me, it's a good sign for us. It means that what they're seeing is institutional adoption is coming, regulation is becoming much more transparent, and it's easier to launch a token now. So that's one thing. They're not worried about the legal implications of launching a token. Secondly, they don't think the market is going to dump in the next 12 months. And that's a really nice thing it's kind of reassuring seeing them talk about it, because they're clearly seeing the market as they're seeing that it's a good time and position for them to launch their tokens after so long of kind of putting it off and not making a full decision, not publicly saying what they were planning on doing. It's pretty crazy to think that MetaMask, the wallet that we were all using, 5-6 years ago, and probably still all use today, is planning on launching a token. And I was kind of a bit confused about what that token would actually entail. Like, what does a MetaMask token actually do? What's the use case of a MetaMask token? I kind of did a bit of deep dive into this. I don't think there's, like a lot of tokens, there's some very important aspects to it, decentralization and governance being one of them. So yeah, I mean, that's one part. There's obviously user incentives and rewards. I think in the long run, user incentives tend to have a negative effect on the token price. If you're constantly incentivizing people to use your and to interact with your token, it's probably because there's not that much of a use case inherently for the token. And it essentially means that you're giving them token, they sell it, creates downward pressure, and has a negative effect on the price in the long run. As I said, there's the regulatory window for this. The people are passing. Well, the U.S. government is passing a huge amount of laws in terms of at least clarifying what it means to regulate your token and your protocol. They're seeing this as an opportunity and window to launch it. One thing that is exciting about it, though, is MetaMask has this plan of becoming the crypto super app. Having a token gives them a way of incentivizing people to build and essentially the MetaMask ecosystem to grow. They've seen let's face it, I mean, MetaMask, the UX has been kind of criticized over the past couple of years. It's not as smooth as, say, Phantom or some of the Sui wallets, for example, or a variety of wallets that kind of popped up. It felt a bit clunky. They've done a big revamp of the UX UI, and it's looking a lot better. But the fact is, we still all use it because probably if you've been in crypto for a few years, that was one of the main options available, right? That was one of the easiest ways to interact with decentralized finance. So I still use it on a pretty regular basis. I don't use it as often as I do, say, Phantom, because it's just so much easier to use. But I still have a large part of my portfolio on MetaMask, and I use it for the various L2s that I operate with. And I think that's one of the things we need to look at in terms of the user metrics. So MetaMask, in terms of monthly active users, has 30 million. And as I said, a lot of people were using Phantom and saying, I saw a Twitter post the other day essentially saying, who still uses MetaMask? And the fact is, because it's been around for so long and because we used it last cycle, we're still going to use it now. Phantom only has 15 million. So that's 30 million monthly active users on MetaMask versus 15 million on Phantom. MetaMask is available on way more chains, obviously across the EVM stack, but also kind of expanding across other ecosystems. Phantom's done a good job of kind of picking up on the growth of Solana, picking up on the growth of Sui, picking up on the growth of the alternative chains, and that's obviously great. It gives us more ways to interact with Web3 and easier ways to interact with Web3. But the truth is the liquidity and the main users still are on the EVM stack. So there's still a huge amount to be said about why MetaMask are choosing now. They're kind of seeing their market share kind of dip a bit, people being a bit more negative about them, and they're essentially creating an incentive mechanism for people to keep using them in the long run and to build, the mega app of tomorrow. I'm still super bullish about MetaMask and the consensus team. Obviously, they're one of the kind of like mainstays across the industry since the early days of crypto, and they've done a fantastic job of building these products consistently and improving on them. The new MetaMask UI is a lot easier to use than it was 3-4 years ago. They've done a very good job with scams in terms of the warning signals that come up when you're using this, and we can see it in terms of the growth trends. So I mean, Phantom's had explosive growth trends, but I mean the growth on MetaMask is still pretty impressive. Year on year they're growing at around 30%. So I mean, nothing is telling us that MetaMask is as sort of a dip. So I think it's a good time for them to launch a token. I'm excited about it, and we'll see what comes with it, because I'm sure they have a lot of plans with Linear, and I'm sure they have a lot of plans with the institutional adoption side of things that Consensus is currently working on. There have been a few announcements, but I feel like we're kind of scraping the top of what's to come with the Consensus stack, and the EVM stack as a whole as well. Cool. Other than that, I think we're coming up to time. So I really appreciate you all tuning in and listening to us. We're going to be here weekly with ICN.live. Please do subscribe. Please do like. We're trying to grow this channel to be one of the biggest things within the crypto space in terms of news and keeping up with what's happening. This was my first episode, and I'm sure we'll get some really cool guests and be able to grow this into something very exciting. And I'm personally very excited about what's to come. So I want to thank you again for tuning in and listening, and really excited to have you guys on this journey with us. Thank you.